Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist.
And we are
The Money Café.
Good morning, Stephen. And the market was down again last night, but not very much. A couple of percent, I think. Is that right?
Yeah, a couple of percent, but initially it was up. And then, of course,
right. And then it faded.
Trump's come out with his 104% Chinese tariff, an extra 50%. Talked about there'll be no negotiation, and so then the 3% up went to negative again. And
so he's retaliating against China's retaliation against his retaliatory tariffs.
So it's almost like we're finally getting on to the main fight, which is China versus US, which is 47% of the world's economy. So all this sort of Canada and Mexico and Panama and Greenland, it's all a bit of a sideshow for the main fight. And all of a sudden, China's actually not going to take it anymore, threatening all sorts of repercussions and counter tariffs. And this is terrible for world markets. And so you've got fights breaking out amongst, Musk versus Peter Navarro and all sorts of stuff.
Well, it's obviously terrible for the Chinese economy. If they get a 100% tariff on exports to the United States, that's going to be a massive whack to the Chinese economy, right? Has to be.
Well, it's a massive whack to everyone. I mean, they're doing $430 billion of exports a year to China, which is 13% of all US imports. But if you think about it, 80% of what is under American Christmas trees, toys, are from China. So do you really think consumers are going to cop, a doubling of the price of toys? It's just a massive impost on the American consumer as well as the Chinese economy.
But Trump's not going to back off, it seems to me, unless China gives up and does a deal. So it's really now, it sounds like it's in China's hands.
Well, I mean, China's just basically saying get stuffed, and so the strategy of we'll negotiate starts with his mates. So yesterday, Netanyahu, we're going to eliminate the deficit and we're going to remove all tariffs and trade barriers immediately, Mr. President. You are the best in the world. And then they announced that Scott Bessent's negotiating with the Japanese, very friendly, Japanese very polite. So this whole sort of hit the world and then picked them off one by one.
Yeah, but Vietnam offered to go zero tariffs, and either Trump or Navarro or somebody said that's not going to make a difference.
Well, because they see Vietnam as a backdoor for China.
Well, and also they say that there's a whole lot of non-tariff barriers that they don't see. They don't know they know what they are, but they think they're there.
Yeah. I mean, non-tariff is interesting. I mean, like our beef and pork, that is basically, it's a non-tariff barrier, which is you don't follow the proper disease management, mad cow rules. Therefore, American beef is banned in Australia. And they keep talking about that because it is a non-tariff barrier.
But it's reasonable, though, isn't it?
Well, we argue it's reasonable, but this goes on all over the world. Why is there not a one American car sold in Japan? There are all these things. There's a kernel of truth in some of the things that Trump says. But I'm amused that Trump loves his aides fighting. He loves to sit back and watch them fight it out. So the one that broke out overnight was Elon Musk versus the tariff man, Peter Navarro. So Musk has come out and called Navarro a moron, dumber than a sack of bricks, and calling him Peter Retardo. And then Trump's press secretary, Caroline Levitt, comes out and says, boys will be boys. But Navarro's obviously winning so far in terms of the scale of the crazy tariff strategy. And this is the terrifying thing, is that the formula is mad, the scale of it is mad, and who is the guy recommending it? It's this crackpot economist who for years has been quoting this fake expert called Ron Varro, he's been saying Ron Varro has done a report. It's this. Ron Varro recommends that. Ron Varro is made up and it's just an anagram of his name, Navarro. Ron Varro. So if we all start doing this, Alan, I reckon you've got to come up with someone called Lana Holker. So you'll start quoting Lana Holker as an expert on MMT and tariffs and housing and all your favourite topics. Because that is this guy. It's so mad.
I think it's got I can see a lot of sense in that. So what's your anagram? Come on, you must have one.
Oh, well, probably hen pets enyam. So an anagram
that doesn't work.
It doesn't work, no. But yeah. So from now on, just you want an expert, come up with an anagram of your own name, start quoting them, and next thing you know, you can be imposing tariff chaos on the world. Welcome to America. This is just anyway.
Yeah. So where do we think the market's going to head? I mean, this is what's clear is that this is going to last for a while. It's going to be turbulent for quite a while. There's no calm. I mean, this is a revolution, right? It's a revolution. So there's no revolutions are not calm. The whole thing is violent. It's always going to be violent. It's going to continue on for a while.
Yes, I agree. I'm in the John Howard camp, which is John Howard is saying, look,
that's
too
an unusual
early.
place for you to be, Stephen.
Oh, come on. It's too early, he's saying. Like, a lot of things are being announced, but in terms of people saying, this is the end of the world order, this is the end of, like, it is too early. I mean, we're one tweet away from Trump saying, I've sacked Navarro, tariffs are stupid, we're going back to free trade. And the market's up, 12%. So how long-term the war is and the chaos is an interesting question. And the thing I thought was most interesting yesterday was US 10-year bonds rose by 25 basis points. They're now at 4.25%. When normally in a crisis, you get the flight to quality and bond yields fall. But what this looks like is the first sign of mass international selling. So mass global selling of US equities and US bonds by the rest of the world, which net has lent or invested 24 trillion into the US economy, more than what the US has invested in the world. So the world, if they go on a capital strike against America, bonds soar, US dollar falls. That is a discipline on Trump.
And that's also showing up in the US dollar, which, when a country imposes tariffs, their currency would normally rise to offset the effect of the tariffs. But in fact, what's happened to the US dollar is it's fallen because of the departure of capital from America. And I think that's really interesting as well.
It is a big discipline. And this is where I was confused. Like, America goes mad with a crazy policy and our dollar crashes to below 60 cents. I mean, what was going on there?
Well, that's just a risk-off thing. I mean, investors around the world were just selling anything perceived as being risky, and the Australian dollar is seen as being risky. I mean, even gold fell, which is perceived as being a safe haven, but it fell.
There's also the commodity. We're leveraged to fast economic growth and China, and if you have a global recession and iron ore prices crash,
And in particular, a Chinese recession, which you'd have to say is in prospect.
Yes. Yeah. So.
So.
Anyway, but now back on much more mundane matters. Are you following the election? I mean, we've got someone coming on Australia's most popular business podcast next week.
We have Jim Chalmers is going to come on.
Coming on the Money Café.
Going to come on the Money Café next week.
Because Alan Kohler is the Joe Rogan of business punditry in Australia.
I'm not sure I'd approve of that comparison, to be honest. But anyway, no. So Jim's going to come on, and we'll you and me and James will grill him. And also, we should say, we'll mention this at the end as well, but if you've got questions for Jim Chalmers, send them in to us and we'll put them to him.
Presume this means we'll have to have Angus Taylor on the following week, will we? We'll get the old, you've got to be equal.
We do. No, we have to.
Good for the goose, good for the gander. We'll have to do one of those.
I tested Angus last night.
Oh, good. Oh, you're ahead of the game.
Ask him if he wants to come on, so we'll see.
Yes. And did you watch the debate last night? The first? No. I mean, basically the reports are sort of Albo won. And I think Andrew Clennell had a good line, which was that Peter Dutton put in his best ever performance and still couldn't win the room because the 100 so-called...
Why was it on Fox?
They've been doing this formula for 20 years. It's the 100, the People's Panel, sort of 100 independent voters ask questions from the floor and then they vote at the end as to who won. And it's in conjunction with the Murdoch tabloid and it's broadcast on Sky. So it's a sort of a News Corp panel popular debating forum. I've been using it every election for 20 years.
Did you watch it?
No, I didn't watch it. But
but Albo won the vote.
Well, he won the room narrowly. But I mean, the Michelle Grattan this morning was no disaster. No one had a train wreck. Dutton seemed to perform all right. So you could argue it was something about nothing. But I mean, the gas reservation policy is interesting. Obviously, the gas companies are very upset with Dutton and the gas reservation, and we're going to drive prices down approach, which is unusual policy for the normally pro-business party.
I reckon, I'm not a political commentator, so just take this with a grain of salt, but I reckon the thing that really matters is how the teals do. Do they hang on to the... are we still with 10 or 11 teals? 11 independents, plus Rebecca Sharkey and Katter, or not. I mean, and because I think there's 5 more teals standing, and so if they end up with more teals, and Labor loses a few seats, I mean, you could see a situation where coalition actually goes backwards quite a lot to teals, right? I mean, that's what I'm wondering is whether, because normally in this situation, in the first election after the change of government, first election after the government's first election, that the opposition makes some ground. The government goes backwards but doesn't lose, and then they're struggling in the next couple of elections. But I reckon that what could happen this time is the coalition goes backwards because of the teals. But I don't look at it.
Well, John Howard said the other day that he thinks that people shouldn't write off the Liberals winning some teal seats back.
Well, yeah, he would say that.
I guess he would say that. But I think I've been house sitting in Goldstein in Hampton for the last 6 weeks, and each side is spending over $1 million, and same with Monique Ryan in Kooyong. I mean, it is a massively, I was at a candidates forum last night where the Greens candidate from Kooyong was there, and she was sitting going, they're both spending $2 million in Kooyong. It's just ridiculous the amount of spend. And I was invited to a friend's house on Sunday. Turns out it was a Monique Ryan fundraiser. I didn't know. I just turned up, and she was getting grilled, and I threw a question at her saying, when you're in negotiations for, are you going to put banning gambling ads in there? And she just said, look, it's on the list. It's a very long list. Everyone's got their shopping list of what we'll demand, so...
She needs money, though. She's every time I turn on the TV, there she is.
Oh,
it's amazing, the number of ads that Monique Ryan is running.
Yeah, it's over $2 million. It is the total spend. Yeah, it is a very, very big spend. But
yes. Well, anyway, I suppose the question economically is it going to matter who wins, really? It obviously mattered who won in America last year. That really mattered. But it's hard to imagine that it matters.
Well, I agree. I mean, it's the old Colesworth line, isn't it? Do you shop at Coles or you shop at Woolies? So, which is a good thing about our stability of our democracy. I mean, I guess even with Dutton and nuclear, like Dutton's got to win 3 elections in a row before you actually will get anything actually really happening with nuclear.
And even then, I don't think it's going to happen.
Yeah, that's right. So, does Australia radically change if we go one way or the other?
No.
No, that's right. At the end of the day, thank God for stability, I would say. World's best democracy, very stable.
Yeah, well, that's...
It doesn't matter who wins. It really doesn't matter that much.
And that's because the place is run by the Reserve Bank and the bureaucracy,
Well, no, I would argue it's because compulsory preferential voting mediates everything to the centre. It takes out the extremists, and you end up with 2 centrist parties which are quite similar to each other, and you don't get massive policy differences because of our political system, which is a great system.
But I think it is true that the reason that Trump is cleaning out the public service in the US is because the public service actually does run the country, and he understands that, and he's going to have to, in order to get control of the country, he has to get rid of them all, and he's doing that.
Yeah, well, I mean, he's getting, rid of a $2 trillion deficit with all this Doge stuff, but it hasn't actually cut anything yet. But it is interesting that Dutton's walking away from cutting public servants, and he's obviously walking away from work from home. So he is nervous about the sort of the Trump comparison. And so there's no appetite in the Australian electorate for anything that looks Trump-like. And Dutton's trying to sort of keep away from that.
Just before we get on to questions, is Star Entertainment going to make it, do you think?
Well, look, it's been 5 weeks. It's been suspended. The Asian billionaire bailout has fallen over. They've now got a convertible note deal, $300 million, put up by Bally, which is a US casino company. I think they're going to go into administration, and investors will lose the full $4.5 billion. But how long can a stock be suspended for? They haven't put out their accounts, which were due on February 28, and it's been suspended for 5 weeks with just endless cliff top poker.
I think there are stocks that we've never heard of that are suspended for years. But I'm not,
Well, there is a rule, that once you've been suspended for 2 years, you're delisted.
Yeah, right.
Because I actually follow the number of delistings. Like we've had 25 of the last 26 months. There's been a reduction in the number of listings on the ASX. So, we're hollowing out with takeovers and failures. And one of the reasons you get delisted is you've been suspended for 2 years. It's automatic delisting.
Right.
So, yeah, but I think Star is cooked. And, how do you go broke selling gambling to Australians? Well, Star's just done it. You gold plate a Brisbane casino and spend $3.5 billion, then no one turns up. So, didn't work.
Okay, before we get to questions, here's a quick word from our sponsor.
Want to take control of your financial future and sharpen your investing skills? InvestSmart's Bootcamp for Beginners is the perfect place to start. This flexible online course covers everything from the basics of investing to creating lasting wealth and building better money habits. Access on-demand videos for 3 months and learn at your own pace whenever it's convenient for you. Usually $99, Money Café listeners can save $50 with the code MONEY50. Head to investsmart.com.au/bootcamp and use MONEY50 to save big today.
Andrew says, last week you talked about Trump's experiment to get rid of the US deficit. I remember another leader who ran an experiment to reset society in his country. He was called Pol Pot. My question is, who do you think can stop this experiment if it starts to fail horribly?
What would Pol Pot's acronym be? Top Lop, probably. Anyway, but look, the answer to how do you stop a Pol Pot scenario? Well, look, the first thing is that a 78-year-old overweight orange man could have a heart attack. 40%.
Well, also, he's not Pol Pot. Come on.
No, of course he's not. Yeah, but in terms of what could, guardrails. This is a guardrails question, and 40% chance Trump doesn't see out the term because of his weight and age, and he comes out feet first.
Oh, and then we get JD Vance.
Then we get JD
Hooray.
Advance, and we go backwards with him. So, but look, the moderate Republicans, foreign leaders, US billionaires like Rupert and Elon, the media, US judges, governors, US states, the midterm elections. The midterm elections are going to discipline Trump, the Senate, the military will uphold the Constitution. Don't worry, Andrew, we are not heading to Pol Pot. The guardrails will hold, but it is pretty scary.
I do actually half think that Trump's going to mount a coup and will refuse to go and will somehow contrive to stay there, or at least if not stay there, then install a successor and.
Yeah, I think he has ambitions to do that, but I think it will fail. So, don't worry, Andrew. It's not the end of the world. Now, Ted says, what would happen to US interest rates if China, Japan and the EU sat on the sidelines of the US bond market? Well, that's the whole flight of capital question from America. But it suggests that nothing will happen if they sit on the sidelines, but it will be carnage if there's coordinated selling. But the problem is that governments around the world can't just tell private super funds to sell. It doesn't work that way. It's not.
No, but China itself owns a lot of bonds, US bonds, and they could do it a lot of damage themselves. China could, if they, But the trouble is they'd be damaging themselves.
Yeah, that's right. And where does it go to? There's only so much gold you can buy. If everyone says that from now on the euro is the reserve currency, we're all buying euros. That is the ultimate card to play against the Americans. But it would be a massive coordinated effort by everyone. But Trump's ordered a coordinated attack on everyone. So it is a logical response to discipline him.
The chairman of his Economic Council of Advisors, Stephen Moran, is pushing the Mar-a-Lago Accord idea, or at least he was. And they still think, a lot of people still think that's what's going on. But the trouble with that is the word accord, which is completely off the table. There's going to be no accord with the US from anyone, except Russia and Israel, maybe.
Yes. Now, Sarah says, with Australia's super funds losing a lot of value in the recent slump in global equity markets, as a retired 70-year-old pension phase, is it still worthwhile holding funds in a stable risk profile within a major super fund, or should I move out of super into term deposits where returns are locked in?
Well, she's 75 in pension phase. So, look, these are risky times. The market's already gone down a bit, not 10% or something, and then it's kind of come back. Yeah, look, I don't know. We don't know, Sarah, really. We don't know what the market's going to do.
Yeah, but I would say it's no reason to panic and, go all cash or I wouldn't do that. But if you do have cash, I think there is an argument for locking in term deposits now at 5% because there's a lot of talk about interest rates coming down.
Yeah, that's right.
Which is sort of the Fed put or the RBA put, which is if there's a crisis, then as we saw during GFC and COVID, when there's a crisis, interest rates go down to zero and they print money. So ultimately, if Trump blows up the world, official interest rates will fall.
I do think that there's an emotional aspect to it. If Sarah is finding it difficult to sleep at night because she's worried, then okay, that's an important factor is your own emotional well-being. And if you're worried about your money, I agree that with Stephen that you shouldn't panic and get out because markets go up and down, and that's what happens.
Well, this is the thing. Paul Keating, your mate, he really has exposed us all to Trump, hasn't he? He's taken all of our money for 30 years and put it into super with this paternalistic system, and there's $4 trillion in super, and we've decided to put more than 20% into US equity markets, and there every day you wake up and it's gyrating like a seesaw. It is quite stressful. People are deluging their super funds and saying, what should I do, what should I do? So you're right. If you're all in cash, you can sleep. So that's one element of it, isn't it?
I know, it is. Josiah says, love the show. Someone last week asked if state governments would follow Dutton's now abandoned lead on nixing work from home if elected. As a disgruntled New South Wales public servant, I was painfully aware that Chris Minns has already ordered every able-bodied New South Wales government employee back to the office. Is it really just the loss of office culture that bosses dislike so much? What other reasons might there be for putting WFH on the chopping block in both the public and private sectors? I know keeping CBD cafes running was one argument Minns made. Did he make that argument?
He did. And the Property Council was lobbying hard as well to get people into their half-empty office towers in the CBD.
Yeah, fair enough.
But I thought it was good to see Dutton apologising and backflipping. It was so un-Dutton-like. Look, I'd like to apologise. We got that wrong. We should allow people to work from home, and we're not going to sack 42,000 public servants. I like politicians who can apologise, Peter Beattie style. It was very un-Dutton-like, but obviously they were getting smashed by female voters in particular.
Well, that's it.
And
so
he's going to lose the election. He's had to walk it back.
It was total desperation, obviously. But look, Josiah's asking, are there other reasons for bosses to want people back in the office? And I think, apart from culture, the answer is partly to watch what they're doing. There's a sense that they believe, I think it's fair to say that companies and bosses generally believe that working from home is lower productivity.
It is.
And I think that
and lower team cohesion.
I think that is true,
yes,
actually.
It is.
But woe betide a boss who says you've got to work 5 days a week in the office.
They'll leave, you won't keep your workforce.
That's it.
Sally says, how do you think Trump's tariffs could affect the Australian property market? And a totally separate question from Sally. Do you think Telix Pharmaceuticals could become the next CSL, one of the greatest Australian-born enterprises? Well, I guess firstly on the property market, it's not really that directly affected, I wouldn't have thought.
Well, it's only to the extent that it affects interest rates. And I think that if we get 4 interest rate cuts this year, that will lead to a big rebound in house prices. So to that extent, Trump will cause a rise in house prices because of the decline in interest rates.
Possibly, but also because we've also got a Bitcoin question, and when you have a global risk-off event, you see asset prices fall all over the world. So, you see the stock market falls by 15-20%. That can flow through to real estate prices. All asset classes get hit in an asset write-down scenario. So
not necessarily. Look, 2000 share prices fell, property went up because people moved out of shares into real estate. But anyway, the thing about the other thing, Telix Pharmaceuticals. I get frustrated with kind of people talking about the next CSL or the next this.
There's only one CSL.
There's one CSL, but there's also one Telix. Telix Pharmaceuticals is the first Telix. It is a fantastic company. It's got a great product, radio pharmaceuticals. It's really got a big runway ahead of it, I think, globally. And, next whatever. I mean, it's really a fantastic business, and it's going to go a long way. I mean, probably at the moment, I'd say it might even be undervalued.
Yeah, well, it's currently worth $7.8 billion, but that's only 6.7% of CSL's market cap. So CSL's market cap is $117 billion. But I think what's an interesting question is it's a bit like a big mining company. So our other successful sort of pharmaceutical companies are Pro Medicus, which is pretty much a one-product company, and Cochlear, which is basically a single product medical devices company. The really great global miners and global pharmaceutical companies have a range of mines and a range of commodities, or have a whole range of products like the Abbotts and the Pfizers and those massive ones. So CSL has managed to get into a multi-market, global, multi-product scale where its success in one is funding the development of new drugs in new areas. Can Telix break out of that sort of specialist area and become a global pharmaceutical giant? Probably not. It's very hard to build that, and it takes decades to build something as big as that. But look, they're great in their little niche, and we need more Telixes of the world.
Yeah, that's right. That's right.
Now, Russell says, in news reports, I see a commonly used definition of housing stress, which is defined as someone spending over 30% of their take-home pay on rent or mortgage payments. I think this is a ridiculous definition, which doesn't make sense. And then he goes on to talk about why it doesn't make sense. I mean, you've got to have some sort of a definition, Alan. I think it's perfectly fine to go with that, but there's obviously some carve-outs, and I would have thought that if your net assets are over $1 million, for instance, then you can comfortably handle paying 30%. If your loan to valuation ratio is, say, less than 40%, well, you've got enough equity in your home that you can comfortably pay more than 30%. Or if you're paying $1,000 a week in rent, if you're renting a really flash place and you're paying $1,000 a week or whatever, that might put you technically in mortgage stress because you're paying 30% of your income. But, you can always move to a smaller place. So I think it's a reasonable definition. Well, what do you think?
Well, I think the definition of 30% it depends entirely on the person's salary. Because if you're on 60 or 70,000, 30% or 30% is a lot. Or put it more better is that what you got left out of it is not much. It's the really kind of the important thing is how many dollars have you got left to feed your family, and the 30% means more for people on low incomes than it does on someone. If someone's on $1 million a year and they've got 70% left of their $1 million, they're doing fine. They've got tons of money. They're okay. But if somebody's on 60 or 70,000, then that 70% that they've got left is not much.
And bottom line, we need to provide more affordable housing in Australia, by governments. I mean, we're massively undercatered in that area.
Joe says this is a good time to raise the question of when Australia is going to grow up and cut the apron strings to the outdated British constitutional monarchy system of government and move to the presidential republic version of government like our adult friends in the USA. No, thanks.
Do not change anything about Australia.
Fine.
We have the world's best political system. And people used to talk about the revolving door. Remember, the revolving door. Australia's had 6 prime ministers in 7 years. Bottom line is, if someone goes mad, Kevin Rudd, Tony Abbott, they're out. That's
right.
Great. You need the flexibility to sack a mad king. Don't change our system.
That's right.
Josh says, I'd like to hear you explain about value investing. You always explain things really well, Alan. I'd love to hear you explain the basics of this concept. Well, look.
It's in the explanation is in the term, really. Value investing means that you're trying to buy stocks that are good value. And then there comes the question of how you define good value. And mostly it's defined by price-earnings ratio. And also the trouble with it is that you could look at a history of price-earnings ratios and say, okay, well, the average over time has been 15 times or 16 times. So therefore, if something's 25 times selling for 25 times their earnings, that's expensive and not value. But the trouble is that CSL, to quote the company we've been talking about, has been more than 30 times its earnings forever.
So no value investor buys it because it's too expensive and it keeps going up, like big tech, the Magnificent Seven.
Sure.
You never buy it and then it keeps going up and you underperform and then everyone says value investors are hopeless.
Well, that's right. So, but there are times when value investing does work better than other times. So we go through periods when the alternative to value investing, which is called growth investing, actually works better, which has been the last few years with growth investing in, as you say, the big tech stocks, Magnificent Seven, also Commonwealth Bank, for example. So it's been selling at a price earnings ratio of 26 times, which is historically very high. And so value investors have been steering away from Commonwealth Bank for the last few years like the plague. But it's caught them out.
I'll give you an example of value investing from yesterday. I went to the SG Fleet scheme meeting. So it's been bought by a private equity firm for $1.2 billion. So yesterday was the scheme meeting. I was the only shareholder asking online questions. The other 2,700 didn't turn up. Now, this thing floated at $1.85 in 2014, and it's been by a private equity firm, Champ. It's been privatised now at $3.50, so it's been a great ride. There are two value investors that had more than 5%, Jeff Wilson and Regal. So they have looked at this company. They've said, this is value, it's cheap, no one's heard of it, it's going to go up. They've bought more than 5%, far more than the index weighting. They've then had another private equity takeover comes in, and they've made probably a two-bagger, and they'll then go back to their investors and said, we're good stock pickers. Look at the way we rode the boom at SG Fleet, private equity firm to private equity firm, interrupted by 10 years on public markets. That's value investing. It worked in that case. But often it doesn't. And in recent years, that hasn't been the story, and there's been too many. I mean, Jeff Wilson also had 5% of Star. He thought that Star Entertainment was good value investing. That's $4.5 billion of value destroyed. So it's wins and losses on value investing, and you just got to have more wins than losses to actually outperform to be a viable value manager.
Mike says, what do you think Trump's tariffs will mean for Bitcoin? So what I reckon is that in the short term it's going up and down, or it's going down because everyone's jumping out of everything that looks risky. But look, longer term, if you believe in Bitcoin and what Bitcoin sells, as it were, the sort of the new world of finance, it's good because it's going to be cheaper. It's going to become better value investing in Bitcoin.
Great buying opportunity, you reckon? That's what they always say in a crash.
Well, that's if you believe in
Catch
the long term.
a falling Bitcoin knife, you reckon?
A lot of people believe in the benefits of Bitcoin long term, and good luck to them, I say. And for them, it's going to be cheaper.
I reckon they always used to say the reason you buy gold is because when the coup is on, you need it to bribe the border guards. It's the ultimate store of value when there's a coup on.
Oh, I see.
With a massive trade war and crazy tariffs, I mean, if this is all implemented, it's going to make Australian illicit tobacco look like a kiddie's kindy party. Like the amount of crypto bribing of border guards and cheating and corruption to get around tariffs and get untariffed goods into shops is going to be wild. Now, Richard says, interested in your views on the Labor policy of taxing unrealised gains on more than $3 million in super funds, and whether this is likely to be the thin edge of the wedge. Will they move on to more taxing of deemed gains, especially outside super? Now, this is an interesting question. The Labor Party, in their recent budget, have written up their super tax revenues by $10 billion over the forward estimates, and a lot of that is from the extra earnings, taxes on earnings, and anyone who's got more than $3 million in super, you're paying 30%. Even on unrealised capital gains. And this is, Jeff Wilson and others are against it. They're saying it's a dangerous precedent. We'll be asking Dr. Jim Chalmers about this next week. And it's stuck in the Senate. I mean, David Pocock, Jackie Lambie, the crossbench, they haven't supported this. And the election's going to decide it. So, look, it's quite an interesting debate, but it only affects those who've got more than $3 million in super, and that is not that many people at this point, but it's a very lively debate, Richard.
Austin says there's been a lot of speculation about whether Trump's tariff strategy is merely a negotiating tactic or if it is intended to be imposed long term. Trump has repeatedly praised US President William McKinley, during whose presidency in the late 1800s the US collected half of its revenue from tariffs rather than taxes, and there was a large federal budget surplus. Do you think it is likely that Trump is trying to return the US back into an economy where tariffs, not taxes, are the primary source of federal revenue? Is this even possible? Well, when McKinley was president, that was before there was a federal income tax. So, yes, it was true that they raised a lot of money from tariffs, but that was, they then had an income tax, so it won't do that again. But I do think Trump loves tariffs. I mean, I do think he believes that they are a good way to raise revenue, and I suspect he has in his fevered mind that will last. I don't think it is only a negotiating tactic.
Yeah, I agree. He wants to sustain his massive tax cuts from the last time, and he's got to get rid of a $2 trillion budget deficit. And he hates, it's the old twin deficits debate. He hates the trade deficit and he hates the budget deficit, and he thinks that slugging tariffs on the world is one way of helping fix both.
Yes.
But
he does think that. So
it's harebrained and it can't work because the whole world's not going to cop it anymore. So
no, it's right. So look, I think you're right, Austin. He does have that in mind, but it doesn't really mean that that's what's going to happen.
Now, finally, Nick points out that, Alan, you're getting Hollywood attention. Judd Apatow has posted on Instagram threads that Alan's Trump's tariffs report was worth a watch. Now, Nick's right. So Judd Apatow is a very well-known American director, producer, screenwriter, comedian, and is plugging Alan's ABC work. So maybe this is why Jim Chalmers wants to come on the Money Café next Tuesday.
Who's Judd Apatow?
Oh, just a very well-known American director, producer, screenwriter, comedian.
Can't be that well
lots and lots of works, and including now thinks you're the real deal. So this is why they're all swarming Alan. The Hollywood famous one, Jim Chalmers, wants to talk to you next week. Should be a cracker. We're going to go for an hour. We're going to have a special.
I think we probably will go for an hour.
It's a four-hander with all four of us.
There'll be four of us with Jim Chalmers, and please, everybody, send in your questions for Jim and for us to themoneycafe@eurekareport.com.au, and Jim will answer it. And yes, we are going to invite Angus Taylor on as well, so we'll see how that goes. Until then, I'm Alan Kohler, founder of Eureka Report, finance presenter and columnist for the ABC.
And I'm Stephen Mayne, and we'll see you next week.